Getting into our crowding analysis here, the U.S. dollar is set up to gamma squeeze higher. You continue to build a pretty significant implied volatility premium in the U.S. dollar. Be careful chasing bonds here. You got the TLT down there. You can see it a little bit better in that chart. In the correction probable zone there. Crowding risk assets are no longer in a particularly vulnerable state. So we talked about this last few weeks. Deeply negative implied vol discounts across the board. Risk assets, if you look at them here, they're basically at the origin in terms of not exhibiting significant deviation either direction in skew or volatility risk premium or discount. So pretty neutral there. Neutral is not bullish. It doesn't mean it's bullish. It's just not as negative as it has been from an immediate term perspective, signaling perspective. And then lastly, dispersion. Another rolling stop risk GTFO, get the blank out signal, get the freak out. We'll use that for my mom here watching. Get the freak out signal. The last one was on April 8th after that vicious short squeeze we saw post the March FOMC. So you got healthcare, people crowding back into defensive healthcare, consumer staples, low beta, utilities, low volatility, low debt, low beta. I mean, this is exactly what we saw before the market really started to puke in April. And so I'm concerned that the market may really start to puke in July. And guess what? It'd be on fundamental news if we start to see significant negative revisions to consensus earnings estimates, which continue to be comically out the line. I'm embarrassed for Wall Street. So if you're watching me and you're a Wall Street analyst and you work at a major bank and you got 3, 4, 5, 6, $700 million saved up in your 401k and you're watching it around the horn trading your stock, can you start cutting earnings estimates, please? This is a public service announcement. Go cut. You don't have to wait for the companies to tell you. We're sitting here talking about potentially heading into recession, and yet S&P 500 earnings estimates are at all-time highs. It doesn't even make any sense. I'm offended by Wall Street at this point, so apologies for that diatribe. But, I'm up early doing the work on a Saturday morning. I don't know why my competitors are or not, but, maybe that's why we continue to take share. So I'm grateful for that.